Today we're going to talk about why you should not file your tax return with your last pay stub of the year, as well as why you should not file your tax return on the first day of filing, before the first day of filing when the IRS opens, just to be sure that you got all your tax forms. We'll get into all of that as this video progresses. Again, I am a licensed CPA with just about 2 decades of experience. So these are the things that I've experienced throughout my career and throughout my experience. So again, appreciate anybody if you find this video helpful, useful, like and subscribe. So I've gotten a lot of questions over the years about, hey, I want to file my tax return. I don't have my W-2 yet. I only have a W-2. Or I have multiple W-2s because I work more than one job. I got my other W-2, but I'm missing one of them. And people want to file their tax return as soon as possible. I have one client that this occurs on an annual basis. And my always advice to them is let's not file your tax return until you get that W-2. As there's things that can change based off your final pay stub, or errors that could be made. Your company could just make some adjustments, and it's just good practices to file using the actual IRS tax forms or actual filed tax forms that you receive. So what I say in this particular case is I understand people's motivation to wanting to file ASAP, and it's because you're probably going to get a refund. And I think it's a matter of changing the behavior and the mindset. With that being said, you don't want to end up getting a large refund at the end of every single year. If you have an outlier year where you're applying for a residential tax credit for solar panels that you put on your roof, that's a different story. But if on an annual basis you're continually getting several $1,000s as a refund, you're going to want to change your withholdings and change that mindset. You should really only you should bare minimum be covered and not get a large refund at the end of the year. As basically what you're doing is you're giving the IRS an interest-free loan. Your money's not working for you, and there could also be issues that pop up as the year progresses where when you file your tax return, the IRS may hold it back. You may not may take you a long time to get your money. There's several fraud cases that end up happening. You could be a victim of ID theft protection, which basically means the IRS, somebody files a return, your social security number, and then you got to go through and paper file and get an IP pen. All those things can pop up, which is why I'd like to say don't utilize the IRS as a savings account. Do I think that you should have enough put aside so that you don't have a large balance due or no balance due at the end of the year? I do. I think there's a way to gauge it. So I think you should, I think $1,000, should be plenty of a cushion for you. So let's use an example. Let's say on an annual basis, you get $6,000 back every single year, basically, give or take. Because for the most part, most people's tax situations don't change on an annual basis. You're going to receive a W-2 if you're employed, and you're a W-2 wage earner, you're pretty much going to receive that W-2 on an annual basis regardless. So regardless of what it is, you might get a small amount of an increase, you might get cost of living, but you're still going to have withholdings that are associated with that, and the percentage is probably going to about be the same. So that's what I say. Your people's refunds really don't fluctuate year over year, unless there was a significant change, something happened, change your W-4, change job, something along those lines would be the only reason why your refund would change on an annual basis. So my suggestion is, if, say, using this example, you're somebody that gets about a $6,000 refund every single year, I would suggest reducing, and you're somebody that earns bi-weekly, so gets paid every 2 weeks, I would suggest to reduce your withholdings by $5,000 for the year, or $5,200 for the year to make it round numbers. What that would essentially do is you would get an additional $200 per check. So on an average month, you'd end up with $400 more in your pocket on a monthly basis that you can use real time, or you can put into a savings account, and that savings account can earn interest. Now, again, granted, that amount of interest in that savings account probably isn't going to be that significant. You maybe will get $100 at this point, as interest rates are, they're a little bit higher currently, but who knows what the next up and coming year will bring. So you maybe will get another $100 on it if you keep the money in there and you put it in, on a bi-weekly basis. You just put it into the savings account. But that would be my suggestion. I'd rather see you take the $200, open a separate savings account or an online savings account where it's not as easy to have access to the money. You can't go to the ATM. You can't, necessarily easily transfer it into your checking account and spend it. Put the $200, have your paycheck, split up your paycheck and have a $200 per paycheck go into that account, adjust your W-4 so that you're not withholding that much taxes. And then you'll have a nice savings account that's built up, and you just have to adjust your budget. I think it's adjusting your budget and adjusting your mindset. That way, at the end of the year, you're only going to end up with about an $800 to $1,000 refund at the end of the year. And listen, if you don't file the return on, January 27th, which is probably about the projected date that the IRS is going to open this year, it's not that big of a deal, because you're not waiting on $7,000 refund to come back into your account. You already have that money sitting in your account, and you could sit there and you can wait and you can take your time and file a return correctly. So also within going into this is a lot of times people want to rush and file their return. So whether or not you use a professional or you do it yourself and use the do-it-yourself tax software, people frequently rush. And what happens when you rush is you end up making mistakes, you make errors, and you end up then having to amend your return. And then when you amend your return, you increase the risk factor. The IRS has a higher likelihood of auditing you. Now, again, if you're somebody that's lower income, this may or may not be the issue, as the IRS probably will not audit you. But again, still, it's more of a pain. You don't ever want to amend your return. I like to use the analogy of, let's just say you're building something or you're running wire and you're rewiring something, and you're running that wire and you have a long strand of wire, and you rush. You measure it once, you rush, and then you go and quickly cut the wire. You go and you install the wire, you run it through all the walls and everything, you snake it all through, and then you get close to the electrical panel and you're short 5 feet. And now, let's just say hypothetically, you can't splice the wire together. So now you have to go back, rip all that wire out, redo it, throw it away, and recut wire. However, if you took your time, you measure twice, and you cut once, the wire mates it into the box. It might have taken you a few extra minutes to remeasure that length of wire again, double check it before you cut it on the actual wire. You end up saving yourself time. You end up saving yourself time and money, because you don't have that, that additional cost to have to replace that wire, the additional cost, the additional time that it's spending you to go now and fix it. Similar goes with your tax return. So now if you pay somebody and you forget to give them all your stuff, and you push them, you say, hey, I want you to file ASAP, and then you end up getting a tax form after the fact, or you forgot, like, hey, I worked another job in January and I forgot I worked this job in January, and that tax form didn't come until let's just say January of last year, and the tax form didn't come till late, and only your main job you got your W-2. You got to go back. You should go back now and amend, and that's going to cost you extra money. If you use a tax professional, they're going to charge you extra money to go on back and amend that tax return. So that's why I always like to say you should file it right, take your time, file it, and don't rush to it. Technically, employers, companies, anybody that's going to send you out a 1099 or a tax form has until January 31st to send them. Now, there are some outliers on that, meaning a lot of times brokerage statements don't come out until mid-February. Some of them come out even later. But again, as a general rule of thumb, tax forms come out, they have until the end of January. So basically what that means is they got to mail them and have them filed and done by January 31st. So thinking along those lines, you may not get your tax form until early February. I know a lot of tax forms now are electronic, so you should avoid having the snail mail. But again, if you change jobs or something, you may not be able to have access to that electronically. So it's just another reason why I say you should just wait it out a couple weeks. The other issue too is a lot of times early on in the season, granted, the likelihood of it happening on years that there is no significant tax changes, although in past years there has been issues, especially when there has been tax changes, like with a lot of the COVID items, like the unemployment comp where that passed later, or some of the stimulus payments where those items passed later. Individuals that filed early didn't get those benefits, and some individuals actually had to go back and amend in order to get them before the IRS actually caught up with their systems and said, wait, nope, we changed it again, you don't have to amend. So you run into those issues, and then as well as sometimes there's glitches in the system as well, whereas it may hold your return up longer than what it has to. It may flag your return for something that it doesn't have to flag it for. And those are all bugs that are in the system, typically end up being in the system the first couple weeks of the season. The other issue is there's certain tax forms aren't necessarily 100% available on actual tax filing day. Now, again, this varies on an annual basis. Some tax forms don't become available till late February. So it's just something that you're going to want to check. You're going to want to check with the IRS, as well as check with whomever you're using for a tax preparation software if you're doing it yourself, or your professional as well will advise you within that. So I just like to avoid it. I say all the time, I said, avoid the touch points with the IRS. If you have to call them, if you have to write them a letter, it becomes more of a pain, versus if you just correctly file your return the first time, wait a couple extra weeks, you're not gonna delay your refund by that much. All the kinks will get worked out of the system. So I usually like to recommend, filing, at least wait a week. File first, second week of February. By then you should be pretty well set. A lot of the kinks and whatnot should be worked out of the system. So, I just like to say that. And then at least by that time, you give yourself a fighting chance that all your tax forms are received, and you don't forget anything. That's the most important part. Is I can't tell you how many times I've filed a return early, or I've heard of people filing returns early, and then mid-February they receive a tax form in the mail because maybe it got lost in the mail, or just the place was late in sending it. It happens all the time. And then you got to go and you got to amend your return, versus if you just wait and file it a month, a couple weeks after, you'd be in much better shape. And then again, I think it's the biggest thing is changing your mindset. Change your mindset that you're not going to get a refund at the end of the year, that you're going to adjust your withholdings to be just about right in line to what it is that you're going to actually owe. So like I said, if you're somebody that, if you look at the past few years' tax returns and you say, hey, every year I've gotten $5,000, $6,000, $7,000, $8,000, just around in that ballpark, leave yourself a little bit of a cushion and adjust your withholdings. If you're a husband and wife, one can adjust or both can adjust. And again, I did make a W-4 video on how to go about that. So, you can review that video again and see what I have as far as comments in there. But again, I would suggest doing that, and that way you're kind of changing your mindset, and we're not rushing, and you're not running into any issues, no potential issues. You get your refund, and it's the end of the, and it's you're good to go. And then again, sometimes I see people wanting to release the return prior to when the IRS opens, and that opens it up for even more issues, because now literally, some employers don't send the W-2s out till the end of January. So, your return's sitting in the queue, and then it's like, oops, I got another form. And well, it's like, guess what? I can't amend your return for, a solid month after it's been accepted, so that the IRS system can process. Because you don't want to have two returns sitting in the IRS queue. It's going to cause issues, and it's just something that you just don't want to have. So you have to wait. You're going to have to wait another month. So, again, and then if the IRS, so in addition to that, so let's just say the IRS had mismatched information, they might not send you a refund at all. They might send you a tax notice, and then the tax notice is delayed, and, it's just going to delay the entire process. So I always say, filing it too quickly, you're gonna, you'll end up paying for it in the end. But again, there's certain instances where you can. I do have one particular client that I know on an annual basis, they pretty much want to file on the 27th, or that's what I'm projecting the opening day to be. They want to file on opening day, but they have a pretty basic situation. They just have W-2s. They have each spouse works, and one of the spouses has a second job. So they pretty much have a basic tax situation. So for them, it works on an annual basis. There's nothing special in particular. And, here's a prime example of somebody that haven't been able to get through because they get, in any given year, $8,000, $9,000. So again, if you're getting a large refund, it's because you're overpaying, and you could get that money in it on a bi-weekly or however often you're paid basis, and have real-time usage of that money, versus having to wait until the end of the year. Because let's put it this way. So everybody knows it's pretty much as the year goes. So if you receive a paycheck, or if you make estimates, it's just that. You're estimating what your total tax due is going to be at the end of the year. When you go to file your tax return, you basically are going and you're reconciling. You're reconciling your income, you're reconciling all the activity, everything that's occurred throughout the year. And you're saying, okay, this is my actual tax situation now. It's no longer an estimate, it's finalized. Here's where I'm at. Now, whether or not you owe a little bit, maybe your income ended up a little higher, a little lower, you reconcile it, and then it's either you overpaid and the IRS owes you money, or you underpaid and you owe the IRS money. Either which way, whichever way you slice it, if you're underpaid, you should adjust your withholdings a little bit higher. If you overpaid, you should adjust your withholdings a little bit lower. Again, obviously within reason. So like I said, so it's very important to make sure you get all your tax forms, dot your I's, cross your T's before you hit that submit button. And you do not, absolutely do not want to file with your last pay stub, no matter what. So again, just be patient, take your time. I know when it comes to money that, you know, things can be frustrating and you want your money as soon as possible, but you know, sometimes just hearing it out and just waiting a couple minutes, you know, will help you in the long run. Hopefully you guys found this video helpful, useful, and if you have any questions or whatnot, feel free to leave them in the comments and I will try to post a follow-up video or respond. Thanks.